Hi everyone, welcome to the Trading Success Podcast with Cam Buchanan. Now, what are we going to run through this week? Well, we're going to talk about some of the news events that we have coming up this week. We're going to also review what happened last week. We'll particularly delve into the big news from the Jackson Hole Symposium with the Federal Reserve Chairman Jerome Powell, and we'll look at some of the headlines for what came out of that meeting. We'll also look at the charts to see what the reactions were from last week, and then also looking ahead to see where the opportunities lie in the markets this week. So let's get straight into this week and let's talk about the upcoming news events. So this week we have red flag news in America. We've got Wednesday night, so very early Thursday morning, Wednesday night to Thursday morning, 12 a.m. We've got consumer confidence. Then we've got some GDP figures coming out Thursday night. We also have our usual unemployment claims. And then Friday night, we have core PCE price index. All right. And then we have also got some Chinese manufacturing news coming out on Saturday morning as well. The market's going to be closed, so we probably won't see a reaction to that. Maybe on Monday, we'll get a reaction if that news is positive or negative. But that's about it for this week. Actually, there's one major news item, really. One of the biggest stocks in the world is reporting Wednesday morning Wednesday afternoon in the United States. So that'll be coming out after market, AMC. NVIDIA is reporting. NVIDIA, the big chip maker, graphics card, very much involved in all the AI and all the technology that's happening at the moment. They're coming out with their news on Thursday morning if you're trading in Australia on the East Coast or anywhere in Australia. Thursday morning, so that's Wednesday afternoon in the United States. So that recently, that news announcement or those earnings reports have significantly had an effect on the market. So there's been some big movement with that as well. We've also got CrowdStrike, which is a bit of an up-and-coming moving company as well in the AI space. They're also coming out on Wednesday after the market as well. So that'll be around after 6 a.m. when the market is closed. So there might be some crazy action after market if you're trading Thursday morning to look out for. But that's about it in terms of the news. Now, last week, let's talk about what happened in the news. Now, let's go to some of these headlines. We had Federal Reserve Chairman Powell spoke at the Jackson Hole Symposium. And a lot of the announcements, or a lot of the press conference was where he was talking about it's time for rate cuts. So we're expecting the next rate cut at the next FOMC meeting, which would be on the 19th of September, around that time. I think it is the 19th of September, which is a Thursday morning in Australia. So that'll be an interesting move. We'll see what happens there if he does carry through what he's saying, but based on all of the financial indicators, he says he's got inflation under control. Its unemployment is obviously the issue. Obviously, rising unemployment was one of the triggers they needed to see for cutting the rate cut. Obviously, that will hopefully stimulate employers to create more jobs and more production. The manufacturing number was down last week as well, but the services was up. So, and I found that manufacturing, even in Europe, was down as well last week or last Friday when the announcements came out on the manufacturing side of things. So let's go into the charts and let's have a look at where we are currently standing. Now, this is today's trading right here. All right, so we're holding above the 50% of this balance candle here. So this outside candle from Thursday is creating the balance. At the moment, we're in a 3-day balance. If you include today, we're in a 4-day balance. So what that means is that balance rules apply this week on the S&P 500. So the market took out a liquidity zone. I believe, that's on the NASDAQ. It took out liquidity zones. It also took out liquidity zones here last week as well. But you can see we've been trading Friday. We traded inside the range. We couldn't break out of the high and we couldn't test the low. We did test the high last night. However, we did close and we tested the 50%. So let's see if this market, if it gets under the 50% and we see any weakness on the smaller time frames, we could see a test of the low down at 5582 roughly. All right, so look out for that. On the smaller time frames, you can see we are on the 4-hour chart. We're in an expanding range on the S&P 500. We're holding above the trend indicator, so we're still in an uptrend. And you can see we're on this time frame, and you can see we are in a range at the moment. So we've been very bullish here, and then we went into an expanding range, and then we've gone into another expanding range, and now last night we pulled back to the 50%. So the market and price is holding above the 50% on this 4-hour chart. So there's potential. This market is going to see if it can test these highs. If it can break this swing trigger here to the upside, we may get a continuation to the upside. We're going to look for, with balance rules, you want to see a retest of the high. If the market can break the high and hold, then we'll be looking for longs. If it tests the high and fails, then we look for shorts. And when we get these shorts, these markets can short all the way to the other side of the market, which would be all the way down here, which is this outside bar or this outside range on the daily chart. So yeah, there's a good way to map this market out at the moment. Look for longs. If it breaks above the high, look for long continuation. If it fails, then look to short, and there could be some very good short opportunities on the S&P 500. So let's have a look at the NASDAQ. NASDAQ is slightly different. It's a little bit weaker. It's a little bit weaker compared to the S&P 500. You can see we're not as high up as S&P 500 is. S&P 500 is almost back up to all-time highs. We can see NASDAQ went up and tested the liquidity zone on Thursday, and we got a strong rejection off that area. So we tested it on Wednesday. Thursday, we had a follow through, then we failed. And then Friday, we had an inside day. There wasn't a lot of volatility on Friday, despite the positive news from Jackson Hole. The market did rally on the news of interest rates. I'll show you some of the trading opportunities that popped up on Friday night. It was very good. But once again, this NASDAQ is very, very much like the S&P 500 in terms of that it's inside a 4-day balance. Now, we are testing the low side of balance, whereas the S&P is testing the high side of balance. So S&P is a little bit stronger than NASDAQ currently at the moment. But once again, very similar rules apply. You look for a test of the low. Like yesterday, we tested the low of the balance bar. We failed, and then we closed just above it. Now today we've closed. We opened on the low, and we are trying to trade higher. So if you want a short-term fib, wrong indicator. If you're looking for a short-term fib, just run it over that daily bar. You can see how it's respecting the 61.8 and the 76. All right, so this market's going into balance. We're going to look for a potential breakout to this downside if we can get lower. If we fail down here, then look for a test of the upside. So at the moment, like I said, the S&P and NASDAQ are a little bit different ends of the scale of their balance. So it'll be interesting to see if they get back into an alignment later in the week. But there's some really good opportunities there. So let me just show you just on the smaller time. Actually, I'll go to the 4-hour chart, show you the time frames there. You can see the 4-hour chart is bearish on the NASDAQ, whereas with the S&P 500, we're still in an expanding range. You can see here we're going down, up, and down. So you can see we failed somewhere around the 76, and we're trying to extend lower on this 4-hour time frame. So the 4-hour time frame is bearish at the moment because we're making lower lows and lower highs and lower lows. Okay, so a little bit different to S&P 500. Now let's have a look at S&P 500. I just want to show you how we took advantage of that news announcement that came out. Now this was a 5-minute chart, and we had a lot of good reasons to go long down off this low here. Now this purple, this pink box here is what we call the pre-market box. it's a very important reference point at the start of the US Open. You typically look for a test of the high and the low of the pre-market box. And we were waiting for news to come out, and this market was looking like it wanted to break higher. You can see the market came down to the pre-market box and failed. We also had a few levels of support down here that gave a really good opportunity to look for longs. If it's, we look to buy off support, low in the range, and we look to sell at the high of the range and at resistance. Now, this trade was basically 26 ticks on the S&P 500, but you can see that when the news came out, it really spurred it along, and the market ended up going about 150 ticks on the S&P 500 before it found some clusters. We didn't quite get to the yesterday's high. We were expecting the market to at least try and test yesterday's high, and that's what I was expecting anyway, but we never even got to yesterday's high, and then there were some reversal opportunities down and then back up. So this market went into a bit of an accumulation type structure, and that's pretty much how Friday ended. The Friday was quite a fairly tight range, even though we had some nice volatility, nice trades. And this is the great thing about when the market goes into ranges, you generally want to look for buying bottoms and selling tops. And that's a very good trading method to employ when we get ranging charts. So that's what I want to show you on the small time frames. Now let's go. Cryptocurrency has had a massive move. It's bullish. Look at the daily time frame. You can see here we're doing this beautiful swing up. We have failed at the clusters from the retracement leg down here, or the retracement swing. We have swung up into these clusters, and that's where the market sold from yesterday, up around 65,500. So we found some resistance up there, but this market is looking bullish on this time frame, and we'll see if this market is going to go up. And remember this from previous sessions, we've seen Bitcoin stuck in this channel. All right, you can see the market has tested the lows of the channel, it's tested the highs of the channel, but it's finding difficulty breaking out. So we will want to try and see if if the market pulls back again, probably holding above 60,000. That 50% level is a nice level. We want to see the market holding, or even if the market does retrace back from here, I'd be looking for it to come back and at least retest 61,000, 50% here, and look for strength above 61,000 and look for longs back up to 68, 70,000 again, and see if we can get a breakout of the upper trend line. So Bitcoin is looking very bullish, and it looks like traders are accumulating on these lower volumes. Exchange volume is quite low at the moment, and prices are still going up. So that's telling you that there's some accumulation going on at the moment. Now, oil had a very good recovery as well due to some of the Middle East news that's coming out that I don't think we're ever going to see peace at the moment. There's so much going on, and it is scary what's going on around the world. But there doesn't seem to be any end in sight of the conflict. There's obviously a lot of money to be made in weapons, as Joe Biden told us very well. It seems like this world run by the corporations, not the governments anymore, and it's all about profits of the big corporations, and not about world peace or trying to make amends or do anything right for the people. It's all about making money for the uber wealthy. So look at the oil prices, just had an incredible rally. We've extended outside of that last range, and we came down into these buy zones. So these liquidity zones act beautifully well, even on these larger time frames. They can give you some very good locations to look for long trades. Now, this is the 4-hour time frame. You can see we're almost back up to 78,000. So, let's see if we can break 79 and just keep this rally going. We've done a beautiful double bottom down here. There's no reason why this, particularly with what's going on in the world, particularly coming up into an election in the US, I can't see why oil won't continue to rally higher. Though if you look at the daily timeframes, you can see on the daily timeframes, the market is still going into a contracting range because the market's going from lower lows to, do we make a higher low there? Actually, we were bearish on this time frame, and it looks like if we can break the lower high, it looks like we're going bullish on the daily time frame. But on the 4-hour time frame, as you know, the smaller time frames tend to turn earlier. The smaller time frames are bullish, whereas the daily is lagging a little bit, as you would expect. But we're very close to getting breaking out of the lower high and making a higher high. When we do that, then oil is officially in an uptrend on the daily chart, and that could bring in a lot of bigger players looking to buy the oil market or holding oil for a long period of time. So that's oil. Now the final one is gold. Obviously, gold had a good run last week. It's still, once again, maintaining its bullish type structure. You can see we're making higher lows, higher highs, lower. We went into a range briefly there, and then we went out and we went into a bullish state again last week. And now the market is just trying to hold above 20. Well, it's holding above 2,500. You can see here we've found some nice support above the 50% at 25.19, around 25.20. You know, with war, you know, it is the safe haven. A lot of traders and investors go to gold when there's fear, and particularly, you know, the war continues to go on both in Russia, Ukraine, and obviously the Middle East. There's a lot of flexing of might, particularly from the Iranians. The Iranians aren't backing down anytime soon. You know, they're showing off all their weaponry and armory, and you know, it's going to be an interesting situation because, you know, they've got Russia on their side, they've got China on their side. Yeah, it's interesting. America just, you know, recently in Florida, a Russian sub popped its head up just off the coastline, and then as soon as the Navy came, the U.S. Navy came, the sub was gone, and it just popped up to say, hey, we're still around here. Don't worry about us. We're still around. So they're showing how much strength they have, and Russia is a very powerful country. So, you know, America better seem to get their house order, or we could be in for a really tumultuous few years, you know, politically, geographically, but also, you know, a standard of living factor as well. If there's, you know, if we still keep poking the bear of the Russians, and obviously keep backing this Ukrainian scenario, it's going to be crazy. But, you know, there's a lot of money in war, right? So that's the war machine still going to keep pressing on. But, you know, it's not great for people, and the innocent people at the end of the day that are suffering. What is it? Like 650,000 people from Ukraine have already died. So just pawns in the war, right? No one wins apart from the big corporations, and that's all they care about, right? Is money. So it's a sad state of affairs, but that's the world we live in. And while we've got financial markets, we can take advantage of these volatile movements in the markets. So guys, stay safe, have a great week. And like I said, there's going to be some, you know, there's a little bit of news, so there's still going to be some nice volatility. PVI has dropped off a little bit more than what we've seen over the start of August. Coming in September. September can be a fairly volatile event. I think we're going to still see a lot of volatility in the markets just leading up into these elections. January 6th is the election. So I think we're going to continue to see volatility. And I think once that election's over, I think we're going to see this market really bullishly rally into 2025. So looks like a lot of traders is taking some positions in some of these larger commodities as well, Bitcoin, etc., and some of these big stocks as well. So it's going to be interesting to see how it all plays out. But let's take advantage of these smaller fluctuations that we see and trade the market, what we see, and take advantage of the moves that come up, because there's a lot of them. Thanks for watching, guys, and share this podcast. Hit the like button, and forward it to people and friends that you may know, because it's important to share the message and to enlighten people about what's going on in the markets and how the charts can tell us a lot about what's happening and they can foretell the future as well. So there's a lot of skill to be had, and a lot you can learn from reading charts. It can help you in your financial decisions. Thanks so much, guys, and bye for now.